And it's November 15th, 2023, right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's a midweek edition of Business Morning, live from Channels HQ right here in Lagos. Well, let's get to the top stories that set your agenda now. We'll see the African Export-Import Bank, Afrinvest, has launched a platform that will empower African contractors to bid for infrastructure contracts successfully. The initiative, which was announced yesterday in Cairo, capital of Egypt, during a workshop organized on the sidelines of the third Intra-Africa Trade Fair, also covered various products, programs, and initiatives developed by Afrinvest Bank. Company representatives at the workshop highlighted the need for African countries to allow for the movement of labor across borders so that contractors could bring in workers from other African countries where expertise existed. Meanwhile, the workshop was capped off with the signing of multi-million-dollar facility agreements with 6 major African contractors. And ahead of the official release of Nigeria's October inflation report that's coming today, economic think tank and advisory firm Financial Derivatives Company has forecast the headline figure higher at 27.8%. In its latest outlook, FDC says the expected figure would mark the 10th consecutive monthly increase this year if it matches the official figure from the National Bureau of Statistics and the new 18-year high record. Nigeria's inflation rate currently stands at 26.72% due to the impact of high food, transportation, and energy costs in the country. Let's get a quick check on the oil markets. Now, oil prices rose in early Asian trade today on Middle East tensions and a weaker dollar, while investors focused on inventory data after a 2-week delay in reporting. We see for Brent futures, that rose 8 cents to $82.55 a barrel, while US WTI crude rose 2 cents to $78.28 a barrel. The U.S. Energy Information Administration, EIA, will release its first oil inventory report in 2 weeks. EIA did not release a storage report last week due to a systems upgrade, so we're still looking forward to that. To the global grains market, now we see U.S. soybean futures hit a 2.5-month high today, with concerns that unfavorable weather will shrink the harvest in top producer Brazil, fueling a rally that has lifted prices by more than 10% in the last 5 weeks. The most active soybean contract on the Chicago Board of Trade, SV1, was down 0.1% at $13.88 a bushel after touching $13.92 for a quarter of a bushel. That's the highest since August 30th, early in the session. CBOT corn CV1 slipped 0.2% at $4.77 for a quarter of a bushel, and wheat WV1 fell 0.1% to $5.71 for half a bushel. And back here, Afrinvest West Africa Limited has an investment management holding company has launched its 2023 Nigeria Banking Sector Report tagged Getting Nigeria to Work Again. According to the report, banks had to navigate the murky waters of geopolitical rifts that required enforcement of financial and trade sanctions. However, profitability was resilient, called by interest-based income and strategic realignment of the banking businesses. The report also notes the combination of currency devaluation, rate hikes, high operating expense. In terms of global competitiveness, we see Nigerian banks have some catching up to do. Take a listen.
Law enforcement, we all know what it is like. In terms of policy, which is championed by the CBN, how is the sector faring? We dimension this across 5 key indicators. First is price stability. Inflation, we know where inflation is currently. But let's even not look at current indicator. Let's look at it as per last regime on an average basis. 14.3% versus 10.4% in the prior 8 year, right? What does that mean for the banking sector? It means higher OPEX, it means higher CAPEX spend, which means profit numbers should be weaker, might be weaker, is weaker. Then the exchange rate also. We all know what's happened to exchange rates, so I'm not going to stress your hearings. But what implication has that had on the banking sector? In terms of global competitiveness, our banks have lost some ground.
The highlight of the report is really when we look at where Nigeria has come from in the last 8 years and seeing some of the macro factors that's driven us to where we are today. You can see that from the biggest challenge that Nigeria has is really how to get its revenue numbers up. You saw the stats we showed you that today we still have debt service to revenue at effectively 99%. And then you ask yourself, everybody talks about the 87 trillion naira of debt that Nigeria has. Quite a lot of that has come from the ways and means. About 23 trillion naira are dead in the last 8 years. But for Nigeria to move forward, as the minister has said, represented here by Dr. Takang of Mothi, is really for us, Nigeria, to think about what he owns as well, not what he owes. And from the point of view of Mothi, you can see there are many government assets that are available that can generate revenue and income.
Now let's head on to our first conversation. Now, a slew of organizations have joined the nationwide strike called by the Nigeria Labour Congress and Trade Union Congress. The NLC and TUC had said they would embark on a nationwide strike for midnight, and they did do that, and the action is still on right now. Joining us to gauge the impact on the Nigerian economy and other matters is Mr. Idris Shuaibu, economist, joining me from our Abuja studio. Great to have you. Good morning, sir.
Good morning, and thanks for having me.
So, first of all, give us your take on the strike action embarked upon by the TUC and NLC.
I think it's most unfortunate, ill-timed, and really disheartening to see the way Labour has behaved in the last 24 hours. If you look at the genesis of this crisis, a gentleman who is the president of the Nigerian Labour Congress and who happens to come from Imo State decided to visit his state with a view to championing the causes of the common man, if you like, and in particular the civil servants in the state, because we were told that for almost 44 consecutive months, the state government has not been able to pay their salaries. Now, a national leader who decide to go to his, domain or his state to champion the cause of, workers, there's absolutely nothing wrong with that. But I think the way and manner the Nigerian Labour Congress and the Trade Union Congress are taking the issue that eventually arose arising from the NLC president visit in Imo some 45 days ago or 2 months ago is rather unfortunate. Can you imagine, because one person has been quote and unquote said to have been maltreated, the entire Nigerian economy, most part of it yesterday was grounded to a halt, and quite a number of people have lost money, they have lost businesses, they have lost time, and even hospitals. People who would have gotten attention by medical practitioners happen not to have gotten the attention because one person, was said to have been maltreated. Yes, I do believe that the Nigerian police will certainly have rooms to improve, because even the best system has room for improvement. But let's call a spade a spade. They may have been wrong in manhandling the NLC president, but is that enough reason why we should all cast aspersion on the Nigerian police and then to plunge the country into the crisis that we have plunged, the NLC has plunged this country to? Yesterday, most part of Nigeria, there was no light. Imagine the quantum of resources, factories and offices expended in trying to generate electricity using diesel. your guess is as good as mine, but I'm sure billions of naira were lost yesterday and we will continue to lose today because these guys have refused to heed calls by senior citizens, religious leaders, and even a competent court judgment restraining them from embarking on this strike.
And definitely, Mr. Schreiber, he is quite a big deal, the NLC president, at this point. And how else do you think, this could have been handled? Even though I'm not, I don't like strike action at this time, but, considering the economy is going through a lot, right now, but how else could the NLC and TUC have handled this matter, in your opinion?
My dear brother, we are not living in a banana republic. We are living in an environment where there are laws and there are regulations, there are rules, there are quite a number of strategies and policies put in place that aggrieved persons can actually seek redress. We have courts of competent jurisdiction. Why wouldn't NLC, for example, take the police to court? Why wouldn't the NLC or the president of the NLC who was said to have been molested, why wouldn't he seek redress in a competent court so that his rights can be established, and if there are any liabilities, such infringement, he could claim damages. Why will the entire Nigerian population of 250 million population be plunged into crisis because one person is said to have been molested? I do agree. If the label says, one for all and all for one, but then let reason always prevail. We are not living in a jungle society. We're not living in a banana republic. We have leaders, we have governors, we have local government chairmen, we have a president, we have ministers, we have judges. And I am sure the last time I checked, there are quite a number of people that have approached Nigerian courts, even for libel, talk less of physical injury. And people have gotten judgment, and judgments have been enforced. So why didn't the Labour Congress, why didn't Ajero himself in his personal capacity, since he was the one who was injured, why didn't he go to court? I mean, are we saying that the courts are useless?
Right. Paint a picture for me right now and for us viewers here. What kind of damage would this have on the economy right now? Do you see us making any headway with this strike culture, that we have in Nigeria? Mr. Schreiber, I don't know if you heard me.
No, I didn't hear you. Sorry, I lost the...
Yeah, so I was saying, what kind of... I want you to paint a picture, for us. What kind of damage would this, this current industrial action, what kind of damage will it have on the economy, right now? And are we making any headway, with the strike culture in Nigeria? Are we getting any benefits from, the countless number of strikes we embark on in this country?
My dear brother, if I were to dimension the losses and the consequential damages inflicted to this country, we will be talking into billions of naira, like I said. Number one, let's look at how much money companies, organizations, and offices have spent to generate electricity just to sustain operation using generators. How much diesel in terms of naira and kobo have we used to generate electricity arising from these issues? Number two, let's look at the consequential loss. When you use a generator, you automatically emit smoke and you deflate climate. So in an era where we are talking of sustainability, we are having this kind of, quagmire. We are also exacerbating, the heating of our climatic condition. Number three, quite a number of people have had appointments, I am currently attending Chartered Institute of Personnel Managers annual conference in Abuja. From day before yesterday to yesterday, a number of us human resource practitioners have had to grapple with this, strike action. Quite a number of people that are in a hospital, in one hospital or another, have had either, doctors not being able to attend to them, some people wanting to get to one location or another, commuting from one location to another has been enormously inhibited. I mean, 1 hour will be too short and, a time to dimension the level of damages. If you will trace the history of the Nigerian Labour Congress, from the time of Hassan Sumonu to today, how many of, labor unions strike action produce any impactful result? There's a popular saying that whatever peace cannot, achieve, war will certainly not achieve it. And even if you decide to go to war, quote and unquote, in this case, you go on strike, you still have to come back to a drawing table. You need to go to a conference room, sit down, discuss the issues, and find an amicable way to settle these issues. I am, a labor practitioner. I am an entrepreneur, and I sympathize with labor. I do sympathize with labor, but then the level of my sympathy and empathy ends with a situation where you just want to go on strike at the slightest opportunity. I tell you, my brother, yesterday, quite a number of our conference participants couldn't get to the airport to fly to Abuja for this conference. They have made payment for the conference, they have made hotel bookings, they have bought air ticket, and they couldn't go. What kind of thing is this? Because of one person? Yes, I know that, the saying goes, if they go for one person and you refuse to act, the next you may be the next person. But that notwithstanding, the labor need to tread on the part of caution. They don't need to plunge this country into another crisis, particularly at this point in time when the cost of living has been enormously high. We are witnessing hyperinflation. There is devaluation. There is fuel subsidy removal. There has been this, there has been that, and yet we exacerbate the suffering of companies and the common man because someone was said to have been maltreated in Owerri. Come on. We should grow up out of this. Labor should grow out of the era of, plunging the country into crisis, calling for industrial action as the slightest opportunity. Let us borrow from what happened in Britain when the labor union during Margaret Thatcher regime decided to plunge the United Kingdom into monumental crisis, and Thatcher said the lady ain't turning back, and we had winter of discontent, and eventually the labor lost its steam and completely became disseminated. If NLC and TUC does not take care, they may end up losing support. I have been reading in quite a number of sections of the media where a number of staff and indeed their financial members are not in support of this action. So why is it that a few leadership of these unions will just be hijacking and insisting that the nation should be brought to a halt because of any minute issue?
Right, I guess compliance definitely is still an issue here. And Nigerians, businesses, individual households, everyone is going through a lot right now. We definitely don't need to compound all of that strain. Thank you so much for your perspective today, Mr. Idris Shuaibu, economist. Thank you so much for coming on the show today.
Thank you for having me.
All right, we'll take a break now. Still ahead on Business Morning, we get a sense of the state of entrepreneurship in Nigeria. Given the macro headwinds, also be keeping tabs on the markets. That's to come. Just stay with us. Welcome back. According to a 2022 report released by the Small Medium and Enterprises Development Agency, that's SMEDEN, and the National Bureau of Statistics, there are about 39.6 million micro, small, and medium enterprises as of 2020 in the country. In 2022, Nigeria had an entrepreneurial index score of about 0.58 points out of 1.0, implying a slightly better than average performance on entrepreneurship development in Nigeria. That's according to Fate Foundation. Well, let's get a sense of what can be done to create an enabling environment for entrepreneurs in Nigeria and also founders and startups. Joining us for this conversation now is Professor Joseph Nana, Chief Economist, Development Bank of Nigeria. Great to have you on the show. Long time no see. Good morning.
Hi, Laddie. Good morning. How are you doing?
I'm fine. Welcome. So let's get into it now. See, the business environment is getting really heated, right now with industrial action, rising inflation, and pressure on the naira. Paint a picture of how entrepreneurs, have fared in 2023 with the rising costs of doing business right now.
Well, thanks for the question and thanks for having me, Laddie. So you see, the state of entrepreneurship in Nigeria is quite dynamic. You see, we always have these ups and downs in every business cycle, but in particular for entrepreneurship and entrepreneurs broadly in Nigeria, it's mainly challenging because, let me give you a scenario where we are as an economy. So on the one hand, we can easily state that the economy is in a state of disequilibrium. What that implies is demand, supply, and especially prices are not reconciled. In other words, if you take a look at the price pressures, we can categorize our economy in hyperinflationary territory right now because we've seen a continuous rise in inflation levels. Core inflation from 2007 till date has gone from 11% to now at 22% and still climbing. Food inflation continues to climb at 30% and rising. Headline is around 26.7% and climbing. Our forecast says we will probably be around 29% before the year runs out. And the years runs out, basically we're in December periods right now. So we can expect a acceleration in prices. But what's important for this conversation is how are households, MSMEs, and the larger entrepreneurship environment faring in this period? I would have to say, if we know that inflation continues to eat at the savings propensity of entrepreneurs, especially households and MSMEs, it's definitely a daunting task for them to basically muddle through. Access to finance still remains a challenge, even though entrepreneurs might get access to finance by raising capital externally and even internally. The real question is, at what price point? And can they be able to repay, or will they need elbow room in the form of moratoriums or forbearance in order for them to get some level of realignment and balancing for their growth within their respective industry? So I think to sum it up, the entrepreneurship development in the country is promising, but in the end, because of the headwinds we face, the macro headwinds we face right now is quite daunting for entrepreneurs. I've always said this, that business owners in Nigeria are the toughest individuals in the country because they have to plan and replan, strategize and re-strategize almost on a daily basis. So when we see prices inching upwards, if we don't have inputs in the country, they have to source it externally. And if they source it externally, it implies that we're now importing that inflation into the country and putting it into the cost of goods manufactured, culminating in a higher price for the final consumers, you and I. And it will probably put that business at a comparative disadvantage from other companies who already have the final good and service ready to go and just brought into the country. So I see entrepreneurship in Nigeria as a work in progress, but there's hope because there's still a lot of funding, a lot of interest in the economy. That's why I sincerely believe if entrepreneurs, MSMEs can muddle through this difficult times, there's always going to be a light at the end of the tunnel.
Talking about imported inflation at this time, we got CPI data for the U.S. Yesterday. It came out lower than expected. We had the UK CPI that came out this morning, also lower. So I'm wondering, our inflation is going in a different, direction at this time. We're seeing, big economies coming down at this time. Do we still have that issue of imported inflation? Seeing that inflation in those countries are coming down, whereas ours still going up?
Sure. I think the cost-push inflation is a function of the exogenous variables that affect our overall operations in the country. You see, so when you look at the price of wheat, for instance, and the supply chain bottlenecks that we have to face in order to bring the wheat into the country to make bread and cereals and so on, you will find that there are a lot of bakeries closing up shop right now, simply because they can't make ends meet. The prices of inputs has gone up for them, and that kind of cuts across the economy. So if we say inflation in the US, the UK, Eurozone is going down, it simply means that their monetary policy is more effective. The transmission mechanism to bring inflation down by hiking interest rates up is more effective and more responsive to the decisions the respective central banks have taken. In Nigeria, we know that the central bank started hiking rates late. And when they started, it was at 25 basis points and so on. So that is partly the problem. But beyond that, endogenous, we have to look what's happening within the economy. On the one hand, we aren't, at the last report came out from OPEC that Nigeria came out #1 in terms of oil production for the first time this year, which is a good sign of showcasing that we're curing the insecurity and the vandalism and if you like, the bottlenecks or the leaks that occur in the Niger Delta region. So that's a good sign. If that could be continued on, that's great. But more importantly, other endogenous things that occur in the country, such as insecurity, that needs to be cured. You have flooding, that needs to be resolved. So those things affect food. And food is a major component in the computation of inflation in the country. So I see the next MPC meeting, if you capture everything that's happening in the global and local economy, my suspicion is the monetary authorities will have to probably think twice about keeping rates at steady state. My suspicion is they'll probably hike rates up, which makes it harder for businesses to borrow, but also it also sacrifices growth, means that we have to slow down economic growth to tame inflation. That speaks to a different set of conversations regarding inflation targeting and so on and so forth. But we're not going to get into that. All I will say for now is that when we look at inflation across the globe, Nigeria's problem is beyond the monetary authorities. The monetary authorities cannot be everything to everyone. So the fiscal authorities, on the other hand, have to now do some heavy lifting in driving tax collections, expanding the tax base, and so on. And a lot of work is going into that anyway. So the issue I see is we expect a silver bullet to cure the problem right now. We have to be patient, and we have to tighten our belts, because it's going to be a rocky road, but there's still going to be a light at the end of the tunnel.
Right, definitely hoping for that light at the end of the tunnel and not a freight train, coming. But in 2022 and into 2023, we've heard of news of startups raising financing from VCs, from seed, Series A and B. And how does this kind of business environment impact how VCs interact with, Nigerian startups? How do you see the FX distortions impacting raises for startups?
That's another interesting question. You see, I think when you look at the startup subsector in the country and you see what private equity firms are doing, venture capitalists are doing, there are a lot of low-hanging fruits in terms of who you're going to deploy your resources to. Even in a hyperinflationary environment, even in a recessionary environment, there's always going to be opportunities in those economies. In Nigeria, we are so dynamic enough whereby in a recession, you will still see some level of investments, albeit slower, but still coming in to specific sectors. So I see VCs as well as private equity firms. Let's not even forget the African Development Bank, Islamic Development Bank, and other DFIs, such as my organization, Development Bank of Nigeria, Bank of Industry, and the likes. These folks are still trying to galvanize resources to pump into the real economy to showcase that there's still opportunities here. I read an article, and I've been following this for some time now. The African Development Bank, along with the Islamic Development Bank, French Development Bank, have pulled funds together with some local DFIs to basically fund startups who are in the ICT as well as the creative industry. So, and that's to the tune of around $600 or so million. So if this is available, it means that these organizations believe and see the real potential in startups in the country. Keep in mind, I'll preface by saying this, the mortality rate of startups is very high. In the first 5 years, probably 80% or 90% fade off. But notwithstanding, the ones that do survive and mature have the opportunity to change the narrative for startups in the short run and ultimately becoming larger enterprises and maybe conglomerates in the long run. So let's not be confused about the potential of startups in the country. If you take also a look at what some of the Fate Institute has done to dimension where the startups are actually coming out of, it's coming out of the least suspected areas. So I think everyone should take a look at that report because they do great work as well. But I'll pause there for more questions.
All right, looking at as it is, right now, do you think startups will survive, in this environment? And what do you think can be done to ensure survival of startups and entrepreneurs?
So my take on startups is we know that startups have a high mortality rate. In the last 5 years, we've seen a lot of startups come and go. I read a report that 95% of startups die in the first 5 years. Notwithstanding, you could also look at from the lens of if you take a look at the potential startups have, because we have a burgeoning youth population. There are no jobs. Access to capital is relatively high. If you're lucky enough to get a loan, it's going to be relatively high. That interest rate being passed to you, you may not be able to manage it enough to grow your business. Some startups need patient capital. Nay, most startups need patient capital. And we need to create an environment whereby we cater to startups to allow them to grow and absorb the unemployed and underemployed in the country. And there are a lot of talent in the country, and the level of job creation is not high enough to essentially absorb the labor supply, if you like. So I would imagine a scenario whereby there will be policies put in place to cater to and protect infant industries, which I would consider startups to be a subsector of that segment. We have to ensure, whether it's through tax reprieve, whether it's through protecting them to get them better access to finance, patient capital, and so on. If the notion of getting FX is a challenge, perhaps we need to create a level playing field whereby FX is available to folks in the startup sector who are into importation of inputs. Because in the end, we don't create a lot of inputs for companies in the country. But there's still a lot of pockets of hope around the country, especially in the agriculture sector. I saw an article where a gentleman in the southeast was into cassava production. And the seeds, he has his seed permutation allows for better harvest and so on. Right. And that to me is an opportunity there, because if selling cassava in itself isn't as profitable, I surely bet the seed in which it's used and grows from is very profitable, and that could be a viable venture. And that cuts across a lot of different segments. So my advice would be to look for It's important to look for problems. There are problems everywhere, and look for solutions to solve those problems, and the money eventually will come. You have to be able to sell your idea to potential investors, and the money will come. Start with what you have and grow organically. That's the idea. And while I understand the country is challenged, while I understand the headwinds are real to everyone, I don't want a situation where people give up hope. Because in the end, hope springs eternal. And if you have a great idea, harvest that idea. Work with like-minded people. Partner with institutions. Partner with universities. This is the breeding ground for ideas. And what I find so far is we don't believe in ourselves enough to stay the course. And discipline should be the fulcrum for entrepreneurs right now. To be disciplined is difficult. And if you demonstrate a level of discipline in the medium to long run, the sky becomes the foundation.
Well said, Professor Joseph. And I do believe, patient capital really much needed at this time. Thank you so much for your thoughts this morning. Chief Economist, Development Bank of Nigeria. It's great having you this morning. Thank you.
Thanks for having me, Laddie.
All right, from there now, let's head on to the markets. I know Will's itching to give us some information right there.
Good morning, Laddie.
Investment advice.
Professor Nana was saying that he mentioned, Nigeria needing this silver bullet to solve all our problems. And there is no such silver bullet.
Yeah, the CBN governor did say yesterday the CBN does have a magic wand.
Oh, yes.
At this time to wish away all our problems.
No, we can't do that.
We all have to be patient.
We have to be patient. Patience is key. He's just said it all. We need to be patient and work through the policies that we have in place to ensure that it works for all of us.
Exactly.
So we're just going to kick off with the fixed income markets, where bonds traded bearish yesterday. That means yields were climbing up. It expanded to about 15.8% yesterday, and across the curve we saw it contracting at the short end, and as investors demanded the 2025 and expanded, that rose at the long segments due to sell-offs in the 2033 paper and the 2053 paper. Now look at the NTB, that's the Treasury bills market. We did see that, trading with mixed sentiments, but with a bit of a bullish bias because average yield dropped by about 1 basis point to 13.3% in this segment. Now we're going to be bringing in Vincent Oshoma, is the chief dealer and also head capital market of Interstate Securities Limited, to join us this morning and share what the market has for us, and especially with the CBN announcement for the Naira and old Naira. Good morning, Vincent. It's good to have you on the show.
Good morning, Riz. My pleasure.
Vincent, we did see that, well, let's just kick off with the bond, the reopening of the longest dated bond, that's the 2053 paper. We saw it being oversubscribed in the Monday's auction, more than 3 times that what the DMO offered. But we're looking at inflation now at projections are going to be about 27.8. Are investors positioning for the long term going to be a better bet for them, saying that it's still below inflation? 18% is still not near where we are at the moment.
Yes, that's basically the reason, because when you look at the current scenario with inflation at quite a high levels, and so investors are looking for yields that are trying to get to the inflation, even though higher yields for their fixed income instruments. And looking at the long-dated instruments, a lot of them are pushing for that, to at least lock up the yields for those instruments, because definitely we will have these levels for a longer time. So people are trying to lock up that's why you see the demand for the bond auction, the demand for the long-dated instruments were far higher than the other instruments. People trying to lock up yields for that instrument.
Okay, let's just quickly look at what the central bank, the announcement they made yesterday, or the statement that was released yesterday, saying that to extend the validity of the old, the 200, 500, and 1,000 Naira notes indefinitely, meaning that the old Naira notes will continue to remain a legal tender beyond the December 31, 2023 deadline. And what I want to know, or would like to know, what the impact this will have on money supply, saying that they already collected all these old notes and kept them somewhere. and now they're going to bring them back into circulation. And there's also take into consideration the printed new notes and the costs that the monies that have been deployed to print those. How does that impact money supply, which is right now still a lot in the system?
Yeah, looking at the action by the CBN, I would say it's good for stability in the world, because you know what happened when the policy was announced, how it affected the economy. And if you look at in terms of the money in circulation, you still see the old Naira notes still dominating the new Naira notes. I think meeting that December deadline was not really realistic. I think that's why they are looking at extending this date to not to bring a situation whereby the system will be affected, whereby there will be shortage of Naira notes in the system. So it's a welcome development. The other part is the fact that one of the reasons is one thing, like you mentioned, is to control the money in circulation and also to push people to being cashless. The fact that they have now extended it indefinitely, I don't know how they are going to achieve the other policy of trying to withdraw the money in circulation. But I still think it has to do with the shortages they have in the system. That's why they have to do that, because they don't have enough new notes to meet the demand. So removing the old notes will actually affect the system. I think that's why they do this.
Okay, now we're just going to delve quickly to the equities market. We see UBN as the Union Bank, one of our longest banks in Nigeria. After 52 years of listing on the NGX, the listing yesterday, we do remember that Titan Trust Bank bought them over earlier the year. But what does this mean for the shareholders of Union Bank?
Yeah, Union Bank, the planned delisting is quite unfortunate. When you say, like you mentioned, they have been in the market for about 2 years. And I think the second oldest bank after First Bank in Nigeria. And the fact that they have been listing is quite unfortunate. But when you look at what they have gone through and how they arrive at this stage, it's not too surprising. And also the recent acquisition by Titan Trust. For the shareholders, we definitely are going to pay them off. There's a scheme of agreement that is being arranged, which shareholders will have to accept. And another interesting thing is that the payoff amount has been increased from 7 Naira, which was the previous amount that was being talked about. So it's a good development for shareholders that will be paid off. But for shareholders that invested in the company at its high point, where Union Bank is a true far above the current levels, I think that would be a setback for them. But it's a good thing for them that they are trying to visit the market to look at how they can reposition the bank, looking at the challenges the bank has gone through, even after getting new foreign investors that they can do that. I think we hope that the bank will be able to push through the current challenges and become strong again as it used to be.
Thank you so much, Vincent Oshoma. Vincent Oshoma there, for Head of Capital Markets, Interstate Securities Limited, sharing his insight as to the markets. Thank you again for joining us on Business Morning. So we'll see, Ladi, yesterday the equities market reversed, the negative trend, started off on Monday, and then we got that positive close. And we did see that different movement for the market cap and the all-share index. Yeah. I don't know if it's because of the delisting of Union Bank.
Yeah, that must be.
Something just happened there.
Normally it doesn't go that way.
So it's great to see the market rebounding back into business, green, and we'll hope it continues.
And I'm talking about the old notes. I'm happy that, we can spend, old and new, but it's quite incredible how I hardly see the new notes, but
yes,
that's a story for another day. Well, thank you so much giving us the details there from the NGX and the fixed income market. Let's get a check on what's happening in the UK now. We have Juliana joining us from our London studio. Good morning, Juliana. So we have some data out of the UK. Inflation fell more than expected. You guys are really having it good over there.
Good morning, Laddie. Well, I'm not sure we're having it that good, but certainly this is going to come as much welcome relief for Prime Minister Rishi Sunak, because, of course, at the beginning of the year, he promised that he would halve inflation to get it below 5.3%, and that's exactly what's happened. So the Office for National Statistics have released data looking at inflation for the month of October, and it's dipped to 4.6%. Now, that is significant considering the month earlier, in September, inflation was at 6.7%. So that's more than a 2% fall. Still high if you consider that the benchmark rate for the Bank of England is 2%. But at the beginning of the year, we were in double digits. So this is significant. I think, of course, you've got to look at where we were this time last year to put it into context. And we were just getting into some of the really harsh winter months. We know that the war in Ukraine was really steeping up, and energy bills were significantly high. They have since come down from some of those highs, which is why we are seeing inflation at 4.6% in the month of October. So this is really good news. And considering we got labour market data yesterday showing that wage growth, I believe, was at 7.8%. That far outstrips 4.6%. So it does mean that perhaps we'll be able to spend more at the counters as we come up to the Christmas season.
Right. I can't wait to report drop in inflation right here in Nigeria. Definitely hoping at some point, sometime. But is there any chatter about what the BOE will do next with rates?
Well, that's an interesting point, and I think certainly as we get close to when the Monetary Policy Committee will gather next month, this is going to be a topic of discussion. Are we going to see finally an interest rate cut? Now, we know that for 14 consecutive months, the Bank of England hiked interest rates to where it stands now at 5.5%. They did keep it steady at that rate for 2 months in a row because, of course, there is a consequence of pushing up interest rates. They're doing it because they want to bring down inflation. But when it costs more to borrow, there is just a small chunk of Britain that are taking the burden for all of us. And what that's been over the past year are those who have mortgages. So mortgages have been incredibly high. Their monthly payment that some households have been making have increased by about £500 per month. So I think, people are waiting with a bated breath to see if the Bank of England, led by Andrew Bailey, the governor, will start reducing interest rates. I believe Andy Holden did say that perhaps we won't see interest rates go down until summer next year, but considering a 2.1% decline in inflation has already happened, we could see it much sooner than that, Laddie.
Yep, higher for longer at this time. Definitely looking out for how the markets react later on. Thank you so much, Juliana, for the update.
Thank you. Thank you.
All right, let's get a check on the crypto market now. We see Bitcoin failed to surpass the 37,500 level resistance. That's holding up to be quite a tough resistance, and we see it's blood red in the markets right now. Talking about Coin 360 showing us a color right here in the market, but surprisingly, we're still seeing Solana driving deeper into green territory there. $58 up about 6.21%, but we're seeing a big pullback with Bitcoin, even though we got that CPI data from the U.S. Yesterday showing that U.S. inflation came out lower than expected. Markets in the U.S. did jump, but Bitcoin didn't react positively to that. Ethereum also lost the $2,000 level, down 3.8%. Let's look at the sentiment right now in the market. Is it still a greedy market? Yes, even though we'll have a pullback, it's still a greedy market at 60 points, but a pullback compared to about 70 points we've been at for a while now. Let's look at the top cryptocurrencies we track. We see Bitcoin there, 8 a.m. this morning, $35,000, holding on to that 600 level. And we see XRP going a different direction there. XRP holding up at 63 cents, up 4.97%. We also see Ethereum, and we see BNB, the native coin for Binance Exchange, that's up 1.09% this morning. So it's a mixed picture for some of the altcoins that we track in this market. Let's bring in Solomon Amunde now, financial market analyst. Hello, Solomon. Good morning.
Good morning, Laddie. Good morning.
Yeah, so Solomon, yesterday we got that CPI data for October, beating expectations. U.S. markets jumped, but Bitcoin didn't. Why?
So basically, Bitcoin has been on a very crazy rally from above $31,000 to almost $38,000. But obviously, investors were actually waiting to see the results of the CPI. So most of them took profits off the market because they were not sure what the CPI results would be. And they knew obviously that if it was negative, it would mean that Bitcoin would dump drastically because we've already had a very crazy run. But hopefully the good part is Bitcoin did dump. We saw that healthy correction and we bounced off the 1 week support line.
And let's look at other matters now in the market. Definitely, we had that NFT metaverse craze. That was in, I think, 2021 into 2022. Well, now we see Disney is launching an NFT platform with, I think, Dapper Labs. Tell us more about this, and what blockchain are they gonna build this on?
Yeah, so Disney is actually working on tokenizing some of their cartoon characters, their iconic cartoon characters from the past century, and they're also creating an NFT marketplace, which they dubbed or they referred to as the Disney Pinnacle. So basically, this project is being created by Dapper Labs, and Dapper Labs are also the ones that built the Flow blockchain. So the project will be deployed on the Layer 1 blockchain referred to as Flow.
Right. And should we expect some kind of NFT hype soon?
Yeah, so basically, I feel short term, we wouldn't see the NFT hypes, but behind the scene, there have been lots of developments happening and utilization of the whole NFT. So I expect to see an NFT rally come 2024/2025, because now we are moving on to utility NFTs, and we have better use cases for these NFTs, such as ticketing and a whole lot too. So also the creator economy, talking of SocialFi, would see lots of NFTs being used there. So I expect us to have an NFT bull run come 2025.
Yeah, but it's quite incredible how some of those NFTs that sold for incredible amounts, in 2022 and 2021, they're selling for almost next to nothing at this time. But let's look at other data now. On-chain analysis shows us that the number of wallets holding $1 million in Bitcoin tripled in the last 11 months. What does this say about the state of the market?
I would say it actually means that 2023 presented investors with a very, very good opportunity to buy in Bitcoin at very, very low price. And it shows that most of the market has actually recovered from what it was dealt in 2022. So like we can see currently, Bitcoin has done 100% profit this year. So it's only fair to say most of those accounts were sitting around 500K, 600K Bitcoin, and now they have gone above $1 million. So these are actually good signs, ushering us into the bull run that we're expecting to happen fourth quarter of 2024. So I would say it's a good sign actually for Bitcoin. It's a good sign, and it shows that most persons are also holding.
And I'm wondering, even though most investors get a bull market, in this market, we know that sad story when the market takes all the profit back. How do you not give the market back the profit that you've made in this market?
Well, that takes lots of experience and consistency, and you need to stay glued to the market. But the crazy fact there is that most of Bitcoin maximalists, they are long-term players. So the DCA, they accumulate within a very long period of time, 2, 3, 4, 5, 6 years, they accumulate in Bitcoin. Whereas the short-term traders and also investors, they tend to swing out of good positions. So it all depends on your strategy. But if you don't want to give back to the markets, then you need to have a good trading plan where you can be able to DCA out of the market and secure your profits. That's like the easiest way.
Right. Thank you so much, Solomon Amonde. Always great having your perspective. Thank you.
Thank you very much, Larry. Thank you.
So there you have it. It's still a greedy market, talking about the cryptocurrency market, but we're seeing a big pullback with Bitcoin. We're watching out and tracking how the market plays out. But the NGX still quite bullish right now. That's a wrap on the program. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Also visit www.channelcv.com for more updates. Thank you again for watching. I'm Ladi Williams. Have a profitable day.